Hello, this is Brian Lee, the Test Geek. Welcome to the Geek and the Guru podcast, episode 5. With me, of course, Dean Tinney, the Series 7 Guru. How you doing, Dean?
Fantastic. Episode 5. One more after this, and we've completed this podcast journey together on the
That is
65.
correct. We have decided since the first episode that we were going to add episode 6 because of the upcoming changes to the Series 65 starting June 12th. The biggest change, of course, decreasing the passing score to 70. Oh my God. Yay. But of course, that must mean they're going to make it a monster. Is that right, Dean? Is this thing just going to be so hard?
Listen, in the comments section, if you hear any urban myths, please, in the comments, just ask Brian or myself if there's any truth to whatever urban myth you've heard about any of these exams. But invariably, whenever there is a change, as you know, Brian, people just make up stuff. I don't know. Their tend to be good.
Come from?
Well, yeah, you just wonder. Please note, ladies and gentlemen, the point of decreasing it is so they can get more people to pass.
That's right.
They want the human capital. There are people waiting for the reinforcements of people in the queue who are matriculating, right? So that's another reason your firms want you to pass, because there are people who are waiting on help.
So please stay tuned for episode 6. Yeah. Dean, the Guru, and Brian, the Test Geek, will be busting all those myths right. and urban legends and rumors. Oh my goodness. I can't wait. There are some content changes, to be fair, but it certainly isn't going to be making the exam more difficult. I think, Dean, we should find a higher pass rate for the Series 65 come June 12th. Right. So stay tuned for episode 6 shortly. But today, episode 5, we're going to be talking about the economics and business information. I always found it odd that they kind of paired these two in this particular content area. Maybe they just did it for convenience. Anyway, the economics portion, we talked about this earlier, Dean. I get very little feedback from students who take the Series 65. Now, remember, that's a good thing. It's the things that you hear that people are surprised with and said, oh my God, you didn't tell us this or you didn't tell us that. So not hearing about the economics typically is a good thing, which means the textbooks do a pretty good job with it. The practice questions are pretty good. Dean's videos, my videos, of course, I think are pretty spot on, and there just aren't a lot of questions. Dean, let me ask you this. I'll just throw this out to you. What causes changes in the money supply, how that affects interest rates and money supply, and ultimately how it affects the value of currency versus imports and exports. That's a long trail, but I generally believe that's one of the most common questions.
I always tell Brian, what they're interested in is you don't embarrass the firm at a cocktail party. And if somebody asks you about finance, economics, or investments, and you want to sound smart, you should say it has a lot to do with interest rates. And if you just shut up, you sound good. People say, well, what about them? They fluctuate. Now, the answer to all those questions Brian just asked me are baked into interest rates controlled by the Federal Reserve Board. So yes, you need to know that monetary policy is controlled by the Federal Reserve Board. You should have a general understanding of their dual mandate or mission, which is price stability and full employment. Right now, they're more focused on price stability and the tools they have. The most commonly used tools is open market operations. And you should definitely know that if the money supply goes up, interest rates go down. And if money supply goes down, interest rates go up. Money is like any other thing, right? If there's more of it, you need to pay less rent on it. Now, in terms of Brian's question about how that affects currencies, if the U.S. interest rates go up, it makes the U.S. dollar stronger. That means we in the U.S. can import more products. And I always fight this, Brian, but I hate that the test considers a trade deficit to be a negative thing. Because, I like, Brian, that my little green pieces of paper called U.S. dollars buy me more stuff, more scotch, more French wine, right? But, that would be the point. And if the interest rates go down, the dollar becomes weaker, and that means U.S. exports become less competitive. And, that could be a good for a trade surplus in terms of, selling our products overseas. So basic economics is what I would say, Brian, on that.
That's
What
right.
do you think?
I think in my class notes, along with my video, Dean, I am such a visual freak. If I can see things, touch things, because those correlative things you just mentioned, can easily get matched and reversed and hard to remember. So I like to put a little timeline. I start drawing arrows, money supply, interest rates.
Yeah, I do too.
value
There's
of the
you
dollar,
know,
imports. So I have this timeline in my class notes that I discuss in the video that shows all those correlative facts. But ultimately, and they do this on Series 7, if I'm not mistaken, ultimately they want to know what the impact on imports and exports are. Right?
That's exactly right. I say countries are like individuals, and they have a checking account called a current account, and there are debit and credits to the balance of trade. So, if Americans purchase $300 million of tequila from our Mexican friends, that is going to be a debit to the balance of trade, because we give our Mexican friends the dollars, they give us the tequila. If the dollar goes up, and our Mexican friends are going to be more hard pressed to buy, Caterpillar D12 bulldozers, then, they're going to buy less of it. So indeed, I totally agree with you, Brian. And then it's very basic. I would also say that fiscal policy is testable too, and that's government spending and taxation controlled by Congress and the president. But again, I'm with Brian. I haven't heard that this, I've had people who, when they get their printout and it failed, this has been the area. It shouldn't, and it's very isolated. It's not a pattern, because you should be able to master enough to get the 65 done. This isn't like a semester on microeconomics and a semester on macroeconomics.
That's right. I don't think economics typically is a deciding factor for people passing or not passing the 65. Right. Just a list to a couple other things that typically show up. Leading, coincident, lagging indicators, generally one question. And maybe one question that gives some people problems is the yield curve.
Yeah.
Right? Where typically longer maturity bond instruments have greater yields than shorter maturities. And sometimes that gets flip-flopped during bad or recessionary economic
Yeah, it's a negative leading economic indicator. In fact, that's what's going on with the Fed right now. They're raising short-term rates, trying to put a dent in demand. And you're right. So when short-term rates are higher than long-term rates, that's an inverted yield curve. And to your point, Brian, I tell them there's two leading economic indicators I'd be aware of on the test. One is stock prices.
Stock.
And the other is that yield curve. Yield curve flat, uncertainty, inverted yield curve, bad. And it's been pretty good as an indicator over the last 45, 50 years.
It really has.
Within 12, 18 months.
That's right.
The Fed has been accused of yield curve management, making sure it doesn't invert.
I tell people in Series 7, right, that an inverted yield curve is always a precursor to recession.
There you go.
Because it has for the last 40 years, right?
Right.
So those are the basic economic questions.
One more point, Brian, the business cycle. Sure. Make sure you know the definition of 2 calendar quarters. Yeah, just definitional stuff, right? GDP. So, consumer price index. So it's just a laundry list.
GDP might be a definitional question. Yeah, there's some basic definitional questions. And again, I think that's why we don't hear a lot of feedback about it, because they're basic. The textbook covers them pretty well. My class notes cover it very well. Right. So we don't hear a whole lot about it. And, you and I have it in all of our video material. We cover that stuff, practice questions, all that stuff. So that's pretty good. What I'd like to really discuss for this particular section of the test is the business information. And if you don't mind me saying, that just means financial statements. And how many of us have a degree in accounting or bookkeeping or whatever it is? Because I know I didn't. I had to learn all this stuff myself. First of all, of course, I've got to say this. Dean, I don't know how you're going to feel about this. I think learning balance sheet formulas is a waste of time.
Oh my God.
Exactly. I think knowing assets minus liabilities equals net worth is a piece of donkey dung.
Oh man.
How's that?
I'm always learning something new. I don't know if we can be friends any longer.
Now, having said that, right? Because I tell people, everybody, I say, what do you know about the balance sheet? And the first thing they tell me is this balance sheet formula that they learned in the textbook.
Yeah.
I say, great. Now, tell me the components of the assets in a corporate balance sheet, right? And it goes silent. They can't tell me the components, nor the individual constituents in those components. So if I say, okay, do you know the difference between current assets, fixed assets? Oh, yeah, I know that. Yeah. Okay. List current assets. And they can't do that stuff. Oh, they can recite that balance sheet formula, but they can't
Brian, it's
give me
also
the
important
components or the
because
constituents.
and the reason it's important too is because they do have questions where you have to pull out those individual constituents where
Absolutely.
they don't give you the current assets. They give you a laundry list of ledger entries.
Right.
And from those ledger entries, you then have to pull the current assets, or from the ledger entries, pull the current liabilities to figure out, for example, front running on a little bit, but figure out working capital, for example.
That's exactly right. I have one of my short free YouTube videos, balance sheet. And one of the first things I tell people, I said, man, you got to know your balance sheets if you want to have a good chance of passing the test. I mean, that's really just the reality of this test. You got to know those financial statements. And then I say, you also have to know the difference between a corporate balance sheet and a personal balance sheet, because they're both on the test. They're similar, but they're very different.
I think where they're similar, Brian, and I teach it that same way. I say, we need to know where you're at, a picture in time. And so I say, Brian, for me to do a really good job for you over time, I need to know a lot about you. And so one thing I'd like to start with, Brian, is just today, as of, what is it, May 1st, 2023, could you tell me about your current assets, cash, or things you plan to turn to cash, your long-term assets, your current liabilities, your long-term liabilities? On the personal side, that'd be a mortgage. On the corporate side, it'd be, long-term debt. And let's establish your net worth. And then I say, Brian, how often are we going to revisit that? Now, corporations provide financial statements, which a balance sheet is a part of, every quarter, 3 10Qs, a 10K. And then I say, Brian, how often should you and I revisit this as a part of our relationship? Should we do it every 6 months, end of each year? And then I'm hoping that we'll be able to look at that net worth and see that we can grow that together, perhaps.
Right. And of course, some of the liquidity ratios that stem from the corporate balance sheet that everybody, let me rephrase that most people get on the test. I don't like to use definitives, but we know those balance sheet ratios show up quite often on the Series 65. Right? The current ratio, the quick ratio, also known as the asset test, right? And those are formulas, I guess. To me, that word is just a bad word. When somebody comes to me and says, Brian, can you give me a list of formulas? And I say, no. One thing is, you're only going to use a calculator maybe 5 times on the test. Also, I want to know where these formulas live. I want to see, are we talking a balance sheet formula? Are we talking about a tax equivalent yield, for a municipal bond? I want to know the context around them, not just a list or a string of formulas. But when it comes to the liquidity ratios, right, we know they come up on the test in a great high percentage. Also, I have a practice question that I bet 80% of the people get wrong the first time. Like you said, Dean, it's a string, a list of constituents, right? Cash, marketable securities, inventory, interest owed in the next 12 months. So from that information given, you're supposed to calculate a quick ratio, right? So what they do is they count up everything except liquidity, or except for inventory, and then subtract it. So what they're actually doing is subtracting inventories twice.
Right.
So as a matter of fact, in my class notes, I actually kind of rewrote the formula. I just said current assets, parentheses, excluding inventories, which is the same thing as saying minus, right?
Yeah, that's always the math. I always tell Brian the math is lots of ways to do math, and you just got to do the math that's comfortable to you. So yeah, And then recognize different phraseology. So if you do see something said a little differently, so if Brian's putting it for there as an easier way for you to handle it, just, it's not conflicting. I don't know how many times, Brian, you get this with your content, but somebody will think I've said something that conflicts their test prep vendor. And I say, no, I just said it a different way.
That's right.
And so just make sure, as I always say, buffet, take what you like, leave what you don't. So, yeah.
That's what we do, is it not? We try to take some complex stuff, say it a little differently so that people can assimilate it a little easier. I think that's what we do. That's our job, right?
Right.
There are some other ways of, speaking of other ways of saying things, there's other ways of asking these questions as well that can show up on the test, actually, that doesn't involve math. What's the purpose of a liquidity ratio?
Well, I think that the way I distinguish is liquidity doesn't mean I'm necessarily poor. What it means is, how much do I have available to meet my everyday demand? So if my liquidity is 2 to 1 or 3 to 1, I always think the ratios are helpful too when you think of what that ratio means. For example, we say my current ratio is 2 to 1. That means I have $2 in current assets for every dollar I have in current liabilities. I always joke, Brian, that if I have less than 1 to 1, I better get my butt in gear because I'm on my way to a liquidity crisis. Now, my friends don't get this because sometimes I'm explaining to them that, and they think I'm poor. I say, no, I'm just trying not to turn a long-term asset into a current asset. I could do that very easily, and my liquidity current ratio would jump immediately. But maybe I choose not to. And so, those liquidity ratios in some businesses require huge amounts of capital. We're just talking about customers as well. We have some customers who wish to have more liquidity than maybe we think is prudent because of opportunity costs, but maybe it makes them comfortable. I always joke, Brian, I'm one of those old school Las Vegas guys. I run around with a binder clip with a bunch of $100 bills in it. I call it my wad, right? And that wad, I like to throw out those. So I would feel totally naked and uncomfortable if I didn't have a large amount of liquidity in my life, not only my wad, but just in general. Partly as a function of being an older man than I once was. I used to have no problem walking around with no money, but
that was part of life in our early years, right? Anyway, so the other way of saying liquidity ratio, which was, you nailed it, was our ability to meet our short-term obligations.
There you go.
And so, that really kind of, if you think about it, see, and I look at all of this content on any of these exams, and to me, I believe it begins with the root definition. From that, then, we can use that to have practical applications where math comes in, those sorts of things. So if you begin at the top, right, the 30,000 foot level, a liquidity ratio is our ability to meet our short-term obligations. Short-term. So that means we're only dealing with the current assets. As you already mentioned, Dean, something that, cash or something we can turn into cash in a relatively short term, or our current liabilities, what we currently owe, our short-term interest on our debt, those sorts of things. If you look at it from that standpoint, that basic definition, and then try to apply it, I think it might help a little bit as well. A couple other business ratios, the debt to equity ratio, Dean. What do you think about that? Do we know how that's asked?
I go back and forth on how it's asked. So let me just tell you that. First, we were talking about liquidity ratios, and there's a difference between liquidity and solvency. Solvency means I'm done. I always joke, capitalism without failure is like religion without hell. So it's one thing if I can't meet my current obligations, but it's quite another if I can't service my debt, because then we're going to end up in a bankruptcy situation. I used, for example, Toys R Us. I'd be the first to admit that selling toys out of brick and mortar sites against Walmart and against Amazon is tough. But it also didn't help that, Toys R Us had borrowed billions of dollars and issued billions and billions in debt, which means they're going to, have a harder time. They're going to have a leverage in the business. And that leverage, just like your own personal situation, if you have a lot of leverage, you're either going to make money at supercharged speeds or lose money at supercharged speeds. So I try and make the distinction between liquidity, and we talk to debt to equity, solvency, and that's about the capitalization of the corporation. And again, big picture, right? We all know that capitalization of a corporation starts with equity. There's no such thing as a corporation that doesn't issue common stock. And that might be all they issue. But as we know, they could issue preferred stock, they could issue unsecured bonds, secured bonds. And then, Brian and I were talking about, our situations in terms of competition. And, you got to be careful. Like we think we have a little nice niche. Some of those test prep vendors, oh my God, if Brian and I wanted to go after them and compete with them, I'd say, man, Brian, we're going to need huge amounts of capital. I mean, Kaplan's a subsidiary Graham Holdings. They got billions of dollars. So we should give thought about how much capital we need to compete in a particular space. And then what are the competitive issues of how much of that is debt or equity? I don't know if you're going to get into this, Brian, but there's a concept that does show up on the test about trading on equity. And it's counterintuitive. It's a company that has a large amount of debt on the balance sheet and a small amount of equity. Now, to answer your original question, I got off the sidetrack a little bit. I sometimes have people correct me because I sometimes refer to debt divided by total capitalization as debt to equity. When they give me a hard time, it's usually an accountant or somebody, I say, well, that's how it gets asked on the test.
Yeah.
But then I get wobbly and sometimes I go back the other way. So if you go through my content, you'll find sometimes I'm referring it to a debt to total cap as debt to equity, because that's what I've been told how it gets asked. And it's the answer available on the exam. And then other times I go, oh man, I don't want another accountant calling me. And I refer to it as debt to total capital. Your thoughts, Brian? Is that what you were asking?
Debt to total capital means equity plus debt. That's
Right,
total
exactly.
capital.
That's right.
Right. Okay. And I've heard both ways as well. And it's difficult. That's why I put you on the spot in that.
Yeah, I think I've never heard a situation where both are available to you as a test taker. I've never heard where both of those are potential answers. So it's one or the other. And Brian and I were talking about this earlier before we started the podcast. Remember, you're supposed to pick the best answer available to you. So, make sure you say, okay, well, listen, this is what I'm looking for. I call it projecting the answer you want. And then you're hoping that when you look at the answer set, the answer you want is available to you. Maybe phrase a little different, but if not, then you say, okay, well, I guess that one's not offered to me, so I'm going to have to pick another one. Right?
That's right. That's it. Yeah. Yeah. As a matter of fact, you just made a very important key point that I think that needs emphasized. I try to describe this sometimes. There are a large percentage of people who, are intimidated by the test, and for good reason, because of the challenge that the test presents. But because of that, they oftentimes are looking for these complex answers to a simple problem, right? And so they get caught up in reading the answer choices and thinking, oh, well, that answer choice sounds really logical. Well, who cares how logical it sounds? It might not be the right answer. But what you just alluded to was you were looking for the answer that you thought it was going to be. In other words, you already had an idea of so you answered the question in your head before you started looking at those
I think test takers
that
should.
is key. That is key, my friend.
Yeah. And I also tell you the other thing that I call those, Brian, the wrong answers that are being offered you. I call them distractors.
Yeah.
And, even in Brian's content, he's very good at distractors, wrong answers that sound good. Right. And so that's why it's important that you have overlearn to a certain extent so you can project and kind of know. Maybe you can't get the answer that you want there, but if you overlearn it and you are projecting what you like and it's still not there, at least that can be helpful for you, maybe eliminating a distractor or two. Right. And I call that getting to a 50-50,
Yeah, right.
Maybe you don't get the 50-50, but 1 and 2 is better than 1 and 4, certainly. So,
and the source of my infamous, I guess, I don't know if I call it famous, but cliche that I like to say, answer it based on what not based on how it's worded.
Yeah.
Which a lot of people get caught up in. And because we're not out there taking standardized multiple choice every other day. There's a certain way in which these tests have to be taken. They really are.
Right.
And in my philosophy, I think the simplest way is the best. In other words, without having to overanalyze this stuff to death. I really do. One other financial statement, and I think the question is fairly basic, the one that I hear most commonly, and that's about the income statement from the corporation, right? What do you get when applying the costs of goods sold. What results from that?
Well, I always talk about the top line and cost of goods sold
Right.
being margin,
Right.
right? And then after we have our operating margin, then we go through. Most people are familiar with top line, bottom line,
Yeah.
right? And the lines of that. I haven't had, in my experience, too many people get on the income statement questions about profit margin, but usually what happens at the bottom in terms of net income and earnings per share and price to earnings and dividend payout ratios, that's
That can
where I
certainly
think,
come up too. That's right.
yeah.
Yeah, but I have heard a couple of basic from the top line
Okay.
that when applying cost of goods sold, that you obtain the gross profit
Right.
margin, and that's it. That's the answer is gross
Oh, yeah.
profit.
Well, yeah.
Right. It's just a basic top line income minus or sales minus your cost of goods.
And I hope, Brian, that people don't ever have to learn this in the real world because, I've had to learn some financial statement stuff in the real world, Brian. And my clients and I financed a restaurant that we ended up taking control of. Never again because the margins are just awful.
They are so small.
And
what,
getting that number
2% maybe?
right. Oh, getting that number right. Brian and I sometimes joke, but the margins in the training business are so much better. So God bless all my restaurateur friends, right?
Yes, they are.
They
Yes,
have
they
that
are.
top line and they got that cost of goods sold. Oh my God. There's hardly anything left to fall to the bottom line.
Exactly. Okay, so be careful. I'm going to say this again. I think knowledge of your balance sheets, both from the corporate and from the personal side of it, you can expect to see numerous questions. I don't want to put an exact number on it, but there's quite a few of them on there. I think it can be a difference maker for the test is knowing those balance sheets.
Yeah, one other
Not just the components, but the constituents, cash, marketable securities, inventory. You got to know it to that fine degree. That's why I put that short, I don't know, might be 18-minute YouTube video on knowing your balance sheet.
Brian, I will link that video into the comment section, video description, so people can check it out.
Okay.
The other thing I was going to say is one other point. I had a guy who was tutoring. He said, Dean, I don't want to waste my money on the math. I'm a math geek. And so, I don't want to, any two numbers I can solve for a third. And he did pass, good news, but he called me and goes, God, Dean, he said, I didn't memorize any formulas and I kind of struggled a little bit because it was a little different than what I was expecting in terms of, recognition of those formulas or doing those. I think he was kind of trying to admit in a nice way that maybe he should have not had so much hubris about how bad can the math be to a math geek, so.
I'll tell you what, if you suffer from hubris, the Series 65 will cure you in a hurry.
Yeah, indeed.
And that's a perfect segue to the last section that we want to talk about here on episode 5, and that's the quantitative analysis, the alphas and the betas. Again, if you start seeing smoke come out of my ears, please forgive me. This is one of the areas in the textbook that I really, really, really have an issue with. They give us this, hey, granted to any of you MBA folks out there, God bless you, but we don't have to calculate alphas with risk-free returns. And some of the social media guys give me issue because they say they don't like the way I do math. And I say, well, I do math the way the test asks us, not the way you learned it in MBA. So,
yeah, and Brian, I would add to that, just so if you don't know Brian, the desk geek, he's perfectly competent to do the high-end math. So it's not it's not because he's not doing math because he doesn't know how or doesn't. It's because we don't believe in sharing things with you that aren't reflected on your exam. And in social media, people, I get the same thing, Brian. I get CFAs. God bless them. They're usually, I hope they're better tutors than they are CFAs. I'll put it that way. How you would do this if you were a CFA and you were actually doing the math as that and not as an investment advisor rep are entirely different things.
Right.
So yeah, I'm with you on it. I get called on all the time. So I usually just avoid being called out on it. I usually say, here's my simplified version of how to handle this on your exam. Then I can say, well, I didn't tell him it was the.
You know what, Pete? I do the same thing, and I'll say, now, how does that show up on the test, please? Right? They don't know how to answer that because it's not test related.
That's right.
So we were talking about this earlier.
One other point I want to do, and I'm
yeah.
with you on the smoke on that thing. Even some test prep vendors, I love this guy. He's eccentric. He'll have that formula as a practice question. And then in the rationale, which frosts test takers and myself, he'll say, you won't encounter this on your exam, but for your own edification. I'm like, please, I don't need to be edified.
That's the same thing. I know exactly which I've seen many of these. Oh, by the way, you're not going to see it on the test like this, but let's go through this practice anyway. Why? Why? See, smoke coming out of my ears. I'm telling you. It's like, oh my goodness, because they don't deal with the folks on the front lines like you and I do, day after day after day after day.
Every test
they come to us and say, why do they put this in here?
Yeah,
go,
Brian,
I can have a job.
I was going to say, we're dating ourselves, but back in the day, almost every test prep vendor who had what we call subject matter experts who are in charge of books and QMX actually had to teach classes just so they would know how that would play out in that setting. And now they don't get that. So sometimes I joke they're writing their questions or writing their book, and they're not even thinking about how it will be read or interpreted. And, God bless them. We need them. But, like I said, I'm with you. I think they, particularly 65. I know one test prep vendor who's 65 book, even though the test has not changed, and even going down, the book gets a bit bigger and bigger and bigger. Yeah, it's now bigger than a 7 book. It's ridiculous.
So thank you for letting me vent like that. I appreciate that. So for alpha, which does show up on the test fairly frequently, my version, Dean and I both have slightly different, but actually saying the same thing, right? Slightly simpler versions of calculating or computing alpha, right? I simply say, take the historic beta, the one that often is given to you in the test question, versus this year's beta, which you probably have to determine, right? And the difference between those, or what Dean calls excess return, which is exactly the proper term for it, is the alpha. The difference between historic and this year's beta is excess return, or alpha. And it can be negative.
Yeah, it can be negative. And I would say sometimes the other way, sometimes on the test, they'll refer to it as expected return. Like, and give you a negative beta and say, well, listen, this is not bueno, right? If I had a beta 1.2 and the market went up 10, I'm expecting 12 and I got 11. That the expected return was negative, right? Because we were expecting at least 1.2. So negative alpha.
Do they also, Dean, ask us whether this stock underperformed or overperformed based on those?
Yeah, I've had people get that. I think the most salacious example of this you could get would be an answer set where they give you 4 securities with their betas, and then the return. Your point about that historical, where you compare those numbers.
Right.
And say which one is, more disappointing, phraseology.
Overperformed or underperformed.
Yeah. And you go through. And by the way, again, I'm with Brian on this. You should first, when you get something you think is a difficult math problem, stop, take a strategic pause and say, is there a hack available? God forbid you think you're going to have to do that calculation that's in your book. You just got to say, okay, I remember Brian and Dean on podcast episode 5, they told me that I really don't have to do this. All I got to do is, and then you can just work your way through that. All you're going to be doing is multiplying the beta by the market. They might be tricky and give you the S&P 500 index fund or something where you have to figure out that that's the benchmark. But other than that, it's pretty straightforward. Then you just multiply by beta, and then that return, you just compare them. So, anytime you think you're being asked to do something outrageous, just on the test, I'm not talking about test prep vendors because they do ask you to do outrageous things.
If you're a CFA, don't listen to this.
Yes, but on the test, just stop, say, okay, is there some hack I can do on this that will, I can do? And I remember Brian Dean saying the math isn't going to be, outrageous. So how can I go about trying to do my business? I think, unfortunately, when I get questions, people want to help with questions, Brian. Sometimes it's just because they're just staring at the question. They don't have any kind of an attack plan. Right. And so they stare at it, and then they just, send me an email saying, what do I do? Now on the test, I won't be there.
Right?
No. But on the test, I won't be there. So you got to do something, right? Staring at it is not going to be helpful.
Oh my good. A couple other things to end episode 5 that are very typical for the Series 65. One is opportunity cost. Boy, how long has that question been around this
A
exam?
lot.
Right? As long as we've been doing it,
Yeah.
25 years, right? The risk of not investing basically and sticking your money under the mattress, and that's how I always put it, is an opportunity cost.
I
Right?
call it Brian my wad. The idea that Dean is walking around with thousands of dollars in his pocket rather than having that money invested
Right.
is, the difference between what I could
That's
get, right?
exactly right. Well, whether it's under your mattress or in Dean's pocket.
Yeah, there you go. Doesn't do me any good under my mattress.
Exactly. Those scotch and cigars can get a little costly in Las
There you
Vegas,
go,
can't
there
they?
you go.
That's right. And the other one, of course, is systematic versus unsystematic risk. Again, the textbooks get into that a lot. I think the question is fairly basic. It might be all of the following except, right?
Mhm.
I think it's a basic systematic versus unsystematic question that you see on the test. Dean, what do you think?
Absolutely. So two questions. These should be aim and shoot, point and click questions. I agree.
I think so. Yeah.
The three styles of questions you get are recognition. I call those aim and shoot, point and click. Practical application. That's can you do the working capital current ratio, something like that, and judgment questions. And on systematic risk, the test question is how do you get rid of that? The easiest way to do that is diversify. So on systematic risk, also known as selection risk, diversify. Then you should know a mutual fund is the way to get that done. And then systematic risk in the system, risk prevails despite diversification. I think it's pretty much that simple, don't you, Brian?
Yeah, it's either that or all are except. I think
Yeah.
you
So
diversify unsystematic risk. You cannot diversify.
that's right.
Risk.
So
No.
yeah, I don't think you're not being asked to get a PhD in modern portfolio theory on a 55. You're not being asked to be a CFA. You're an intermediary between the investment advisory firm and the client. So good news that the people who really are experts on this stuff are backstage in what we call the support unit. You're in the business unit. You're the one who's belly to belly with a customer, and you have to have a general understanding of this. I joke. I had a person, Brian. I said, listen, if you think that's going to be a negative, you could always point out and say, hey, what, you don't need to worry about me because it's not me that's doing the math. We got some actuary or some serious math men and women who do this.
That's right. So that pretty much covers the economics and business information section of the Series 65. By the way, it is the smallest, I guess, portion of the test, a total of 20 questions. Doesn't mean you take it any lighter, right? Those balance sheets, like I said, can be a difference maker. Make sure you study your balance sheets pretty well. So that should do it for episode 5.
I just want to add one more thing about that balance sheet too, Brian. I also tell people that if you can turn that into a strength, get it above par, then there can be other things you can be below par on and still pass. That's the other thing where you want to kind of think, okay, there's 20 questions. Brian just told me there's going to be these balance sheet questions. As a test taker, I want to make sure I get all those kind of questions I'm entitled to so that you can be a little more forgiving, perhaps, in other areas of the exam. So there's nothing there that's beyond division or arithmetic. So even if you're math phobic, I'm not a guy who's particularly fond of math. But that being said, you got to be able to do the math. The great thing about a practical application question is there's no interpretation of the right answer. You simply get it right or you get it wrong. You want to save your misses for those judgment questions.
I think that's so interesting. We know that so many people that have, math anxiety, you set yourself say that, you're not a big fan of math. I love math. I always have. I was a science major in college and it was all math. And I just loved it. To me, it's the secret to the universe. But that doesn't mean you need any of it to pass this test. You really, really don't. You're going to use a calculator 5 times. It's basic divisional math. It's arithmetic. It really isn't. And Dean and I both tell people day after day, you're not going to pass or fail because of the math. You really aren't.
It is. And you can go down a rabbit hole on some of the stuff that doesn't have payoff. We're telling you the balance sheet does have payoff. So, if it isn't, you do at some point as you come down the back stretch of your study plan, have to make editorial decisions. and make sure you're making smart ones. Ones like we're telling you, here's some points to be found. Here's some points that, if you want to get it, it's a point. If it's worth your time and energy, who knows? It depends where you're
right. Exactly. Excellent, Dean. Thank you so much. Again, for episode 5, please stand by for episode 6. The changes in the Series 65 occurring on June 12th, 2023. We will be coming to you with that episode very shortly. So please stay tuned for that. Dean, any other closing comments you'd like to make?
I just always want to remind everybody, remember, inch by inch, your exam is a cinch, yard by yard, your exam is hard.
Stay with what you know. You take the test. Don't let the test take you.
Thanks, everyone. See you for episode 6.
We'll see you for episode 6. Take care. Have a great day.
Bye-bye. See you later, Brian. Bye-bye.